What's going on, guys? Welcome on in. We lost $240 trading Tesla and technically a couple of others, which I'll get into here in a second. I just wanted to keep it simple. I say Tesla, but we'll get into the recap as I usually do. So, plan is to dive into the trades. First things first, though, I will say that we did get an Adobe short that probably should not have happened. The Robinhood trade was a break even, lost 450, broke even essentially. So we really only lost like 181 roughly on Tesla. And then the rest was everything else. And I do have an open position on oil, which doesn't look great. So it looks like we're going to have technically another red. We'll see. I don't want to speak that into existence, but it doesn't look amazing. I'll be honest. That'll be a recap for the next video. So final week of July, fucking gonna get me bent over a freaking chair here. Either way, it's okay. We move on. It is a trade. This is I think I came into today a little bit antsy, a little bit anxious. Like I wanted to do something almost. I don't know if that necessarily is something I think I can note. You know. Anxious, almost wanted to take trades today. Didn't need to do that. Didn't need to feel that way. And that was kind of, I think, the summary of today. Something also to note, good piece to add in your TradeZella notes, something to track, something to journal, something to log when you are trading, because you can use that to your advantage in the future. You get enough data that says on days where you come into it feeling anxious, feeling like you need to trade. This is me being objective, like at the end, being taking full inventory after the day's over. That's how I felt. And I put some words to the feelings and like, okay, good. Emotions are not something we can hide and mask. We just have to know when to use them to our advantage and how to use them to our advantage or not. That's essentially, what it's all about, what it comes down to. So let's get to the Adobe trade. We lost about 54 on the Adobe trade first. And then here's another piece. I should add this to my notes. Took too many trades too close together. That also is a piece to today's puzzle. 9:34 Central Time, 9:41 Central Time, 9:43 Central Time, and then 9:54. Yo, what are you doing? In the span of 20 minutes, you took 4 trades. What the fuck happened? That's not generally aligned with being a consistently profitable trader for me. So what happened? That's also part of it. So I think you kind of had the anxiousness and like you're jumping here. Oh, I'm wrong. Oh, here. I kind of had a backup plan in place when I entered the first trade. So Adobe first. Let's cover it. ADBE. Raw recap, baby. This is what it's all about. So I see Adobe, right, on the bigger time frames, and I say, okay, what do we got going on here? Oh, we got a little bit of a breakdown set up. And I see inside of this, or on the 5-minute time frame, I should say, a nice consolidation. I go, oh, that's beautiful. Perfect. It's exactly what I'm looking for. Nice. I like it a lot. Is Adobe weak as of late? Zoom out to the 1-hour time frame. Is Adobe weak? Is it weak? Oh, yes, you can make the argument that it has definitely been weak. And we can almost make the argument that this is in it of itself a little bit of a bull flag, a little bit of a wedge. We're breaking down. So I'm like, okay, bigger time frames do align. Makes sense. It makes sense to take this trade. And I got filled on this candle right here. So this should not have been a trade to begin with. Okay? So let me redo this. Here's the breakdown point. I got filled on this wick right here. If I jump over to my, I don't want to say trusty broker. It's almost sometimes it feels like they're out to get you, but that is what it is. This is again on a $10,000 prop firm account. So let's pull up the chart. Let me pull up Adobe on here really quick. Which, by the way, I was doing well on stocks, with stocks prior to this month. No positions here. My history on this trade, you can see down the bottom, 54 roughly. I'm covering it. Whoops. 54 down here, 82 on the Tesla, 99 on the Tesla, then the 450 on the hood. So all the same numbers that line up with the trades all. But I'm down to 9609, so I'm down like almost $400 in this account. It's essentially because I was doing well. Like my data by the end of the month will not show this perfectly. I was up a couple $100 trading stocks earlier in the month. And then I essentially was down a couple $100 trading stocks later in the month to be more like even, I would say, even on stocks. And I did better this month on Bitcoin, maybe gold, silver, maybe oil, I forget, a couple, or futures, indexes, etc. On the other account, the 25K account versus the stock account, maybe not as good. But if you notice, if I zoom this bad boy in, you'll see this red arrow is where I got filled. Exactly. So this almost under this lower wick right here, it's weird. This on this broker undercuts the low of day because I had a sell stop order in place. That undercut low of day, whereas this this didn't. And the numbers were a little different. So I'm like, I think it was a spread thing, which is my bad. I should have been more closely paying attention to the spreads, which were about 10-cent spreads. So I should have had my sell stop order about 10 cents underneath low of day to confirm we broke low of day. That's what I should have done. But we lost $53, $54 on it. It is what it is. Kind of annoying, kind of sucks, but shouldn't have gotten in the first place. It never technically triggered. And what I should have also done was realize that, okay, it never triggered. Let me get out immediately. Just get out of it is what I probably should have done. So that was my bad. I didn't do that. And that was on me, and I deserve to take that L. Tesla, short and then long. Here's where things get a little bit more like antsy, like feeling like a little bit like, I don't know what I'm doing here. I'm kind of like all over the place. I'm looking at Tesla and I'm like, oh, let's see. I had drawn in the double top high blue line right here. I didn't trade that. I was like, this is not a trade. Not a trade. Not a trade. And then I see Tesla breaking out. Okay, cool. I see it kind of put another high there and then kind of consolidate. So I said, okay, here's where you have more of a flag. Here's more of a consolidation break. We get that breakout. I'm taking the trade. So I get in the trade here where I was looking for a long. But if I were to bring it now, I don't look at the 1 minute chart, but just to show you what I was looking at the time, what I saw or what was happening on Tesla on the 1 minute time frame will be a little bit better to see the 1 minute chart to get a better sense of this. So we break out on that 5 minute candle, right? We break out to the upside, but then we get this, like it nips the breakout. I did not get in long. And then I see it go, oh man. And then it came down to here. The lows of this candle, I go, oh shit, we had a false breakout. When I see Tesla coming up, breaking to a new high a day, and then going down right back to the support level, I'm like, we got a false breakout. What I should have waited for on the short would be a breakdown of that support, get in, then stop loss high a day. The idea kind of was right because we ended up having a good sell-off. It's just that the when is what threw me off. So upper wick on the breakout followed by lower wick right here makes me think, holy shit, false breakout in a bigger picture downtrend. This fits the criteria for the inverse of my strategy. Let's short it with a stop loss over high of day. That's what I did first. That's where the Tesla short came in, lost $82 like that. Now I was looking to target down around 230 or so was my target of like area of interest. So I think we can get down 230 if we do get a breakdown underneath high a day. And we ended up coming down to 227. So the idea was there. It's just the execution was not. Then we came back up and rebroke it. And I said, okay, wait a second. I'm wrong. We're breaking out. Let's go long. So now here's where you're playing that game of like forcing trades, taking too much going on. You're not aligned with what's going on here. Don't bother with it. So that's when the long came in. I got in. It did get a nice push. It looked okay. And then it failed. And as I was looking for on the false breakout trade, that was the fail. So that was my bad. I honestly could have just impatient here. And once the structure really broke down right in here, and I saw we had a kind of a false breakout on this candle. Was it on high volume? It was okay. Okay. It was higher. You could have made the argument for a short in here, stop loss high of day, and then that target down towards 230, which I was looking for, which would have been really good. Would have been a really nice trade. That would have been the argument there. But looking back, just the execution was not there. Wasn't there. And then Robinhood was the last one, which I thought was a good trade idea, and it was. It just, I think I was looking for a little too much on this one, and you'll see why. So Robinhood pushes up off the open today, fails pretty hard. We get a nice consolidation. We get a nice clean level right here. This consolidation zone was a bit wide. See how big that is? And so I put my stop loss at 2137 up here, just underneath or just above the bodies of these candles of that consolidation. And we get a nice move down. We get a move down. I'm up like $100 at the time or something like that, or close to it. It's like, okay, cool. And then we get this snap right back. And then I get stopped out right here because I moved my stop loss to break even and I got taken out. So that was really all that happened. I was just looking for a bit more. We did get the breakdown underneath 21. I thought if we broke 21, we could get a nice move down. Why? Go to the 1 hour time frame, zoom out a little bit more. You do have what is like the makings of a bear flag setting up on Robinhood as it is right here based off the higher time frames, right? So I was like, oh, we break down underneath here, underneath the lows of last week or on Friday. We have room down to the wick that we had on Thursday, which is down to around 2064. That's why I'm like 2075 made sense, somewhere in that range. We kind of got, well, not kind of, we got within 18 cents of my target. It just didn't get the follow through I was looking for, and that's it. Simple as that. Also, you can use Bitcoin as a guide here, and Bitcoin did provide you the opportunity or provide you a good look because Bitcoin was very, very weak. It had pushed up to hitting 70K, failed, rolled over, Bitcoin coming down, market coming down, not a good thing for Robinhood. And it did work initially, and then we got a little bit of a bounce, and then, yeah, it didn't really follow through. So it just kind of became a dud. Not surprising, to be honest, with a week of this nature. Now, I don't want to be trading a lot of stuff that has earnings, like the same day, so I'll be avoiding a lot of that. But Robinhood didn't have earnings this week. I don't think they do. Or they don't have earnings anytime near right now. So felt like that's the place to be. I want to be looking outside of earnings right now. That's the idea. And it just so happened that just some duds, just false readings. I think that the opportunity was Adobe, or looking back on the day, Adobe did not need to be traded, or that should not have been traded. It should never got triggered, realistically. I misplaced my order based off the spreads. That should never have happened. The Tesla trade, the first short, I see where I'm coming from there, but I didn't necessarily, it wasn't perfect to trade that. The volume was not amazing. The long on Tesla after that, if anything here, I could have just taken one trade, would have been long, and then I would have lost on the one. Or you could have made the argument for if I didn't take the short or the long, and I was like a little like sketched out something, said, not going to take them. I could have waited, and there was a good opportunity for the false breakout after the structure broke, the higher low structure broke down, and we had that upper wick, that spike to high, that big upper wick to high day, hammer candle down. When we got that would have been the sign to say, okay, now is the false breakdown. If you wanted to trade a false breakdown, because the higher time frames were down, and then you're looking at Tesla potentially just exhausting the move and then rolling over for a nice pullback. That's kind of like what you're looking at on the false breakdown trades or the false breakout trades. That would have been that. Robinhood, not mad at Robinhood, no problem there. An oil, really good setup in my opinion, so not mad at that one as well. That will be a recap for maybe tomorrow. We'll see when that recap comes out, whenever the oil trade closes up. So we'll see. So you could have done a lot better in terms of minimizing the risk, minimizing the damage here. Did not need to be as big of a red day as it is. However, it is what it is, and we learn from it. It's okay. So I'll see you guys in the next recap. This is TradeZilla. I'll leave TradeZilla linked below like always, and I'll see you in the next one. Peace.